What if I told you there was a little-known tax hack that is perfectly legal, yet millions of eligible Americans just fail to claim this loophole every year? And now with the pandemic, this is even more important. In the next about 15 minutes or so, I will show you how to use this strategy to save yourself thousands of dollars every year. What exactly is this strategy? Who is it for? And why should you claim it? All this and more in today's video. Plus, a special bonus if you stay to the very end for residents of high-tax states that are penalized with the so-called SALT deductions. Hello and welcome to the Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, paramedic, and, well, Clyde just walked in. Bonnie's downstairs still. Before I go any further, a very quick reminder. As my regular viewers will know, I have a team of outstanding lawyers that I keep chained up in the basement. And Clyde, right here, yes, say hi, Clyde. Clyde keeps them from escaping. The only problem with these lawyers is they get a little bit rowdy whenever I make a video, and the only way to calm these lawyers down is to give a very quick disclaimer. Yes, I know, Clyde, we have to give disclaimers. This video is for entertainment purposes only. I am not a financial advisor, I'm not a lawyer, this is not legal, tax, or financial advice, and I'm definitely not an accountant. You should most definitely check with your own accountant. Also, while I have you here, why don't you check out Webull where you can get your 2 free. Or possibly 4, maybe 3, I don't know. You're gonna get free stocks. Deposit $100, use the link down below. A few weeks ago, one of my viewers received an Apple stock, which is not too bad. Or if stock investing is not exactly your thing, you can check out the pinned video below where you can get the equivalent 40 free lottery tickets every single week. Okay, with all that out of the way, let's get to the reason why you clicked on this video. How to write off your home office on your taxes. But before some comment trolls start screaming at their phone,
"But writing off a home office is a red flag to the IRS. Everyone knows this. You're going to get audited. You're an idiot. Unlike, unsubscribe."
Okay, calm down, Skippy. Allow me to explain this. In the past, it was kind of considered taboo to work from home. And for many, claiming a tax write-off for your home office could raise major red flags at the IRS and kind of almost guarantee you'd be audited. But things have changed, especially now with the pandemic. The IRS understands what's going on, and they understand that you need to work from home. In fact, in many cases, you're required to work from home. They know this. Now, before you click off this video thinking, well, I'm only working from home temporarily, I have an office that I'm going to return to after the pandemic is over, just listen for a few more minutes, because you may not have realized that you can claim a home office deduction if you are self-employed, if you're a gig worker, independent contractor, or even if you're an employee of someone else under a very specific loophole. This deduction does not care about your employment status and who you work for. All it cares about is that you work and where you work from. Allow me to explain a few quick scenarios. Then we will get to the actual numbers of how much money you can save. First, let's cover this if you work for someone else normally and you typically report to an office somewhere. But due to COVID, you spent most of the year working out of your home office. While, of course, you still need to check with your accountant. Remember, I'm just some random dude on the internet, I'm not an accountant. But typically, you can claim this deduction for the proportional time you spent at the home instead of at your employer-provided office. If this was 3 months, then you spent 25% of the year, and you can claim 25% of the deduction. If you spent 6 months working from home, that's 50% of the year. You can claim 50% of the deduction. You get the point. This applies the same if you are the employee or the employer. If you usually work from a business location, but due to COVID, worked from home, you can claim this deduction. I do wish to make it clear before I go any further that while I keep mentioning COVID as the reason why you are working from home, there is nothing in the law that even mentions COVID. It's just that you are working from home and that your employer requires this as a condition of your employment, which for many right now is due to COVID. They are forced to work from home, and thus they are most likely eligible for this deduction, even when they normally would not be able to because they go to their office at work. So we've covered employees. Now let's quickly cover employers, and then we can get to the deductions that actually apply equally across for both. While employees can only claim this deduction if you, the business owner, requires them to work from home, you as the business owner have a lot more flexibility, and you can designate your home office as a secondary business location. or more specifically, an administrative office location. IRS Publication 587 says, quote, "You can have more than one business location, including your home, for a single trade or business." It's pretty straightforward. You may have more than one office for your business, including an office at your home. Now let's go over what you can deduct, and then I will cover 2 bonus tips, so make sure you stay to the very end. First, you need to allocate a dedicated, and I must stress dedicated, location within your house to function as your office. This must be solely used for one purpose, that of work, and it cannot be used for anything else. For example, you cannot count your kitchen counter as a work location, even if you set your laptop and your coffee cup up there every morning, because obviously the kitchen's used for other purposes other than work. If you have a spare bedroom or a home study, this is perfect. For me, I have a 4-bedroom house and I have 2 rooms dedicated to work. The first is my home office with my desk, filing cabinets, printer, scanner, and desktop computer. The second is this home studio, where I'm right now recording this video. These 2 rooms are used only for this purpose. It may also be a good idea to take a few photographs of these rooms and document it just in case you're ever audited. You probably won't be, but it's a good idea to be safe rather than sorry. As long as you have that dedicated space, you can use this very simple formula to determine what you can deduct. First, take the square footage of your deducted workspace divided by the total feet of your house. So in my case, I have 2 rooms dedicated to work, and they total about 330 square feet total, and my house is just over 2,700 square feet. This means my 2 rooms take up approximately 13% of my total house size. So I can write off 13% of my housing expenses across the entire year, or portion of the year that you worked if you were only home because of COVID for 6 months, 3 months, etc. You get the point. In general, the IRS allows you to deduct property taxes, mortgage interest. Now that's the interest, not the principal payment, and mortgage insurance, utilities, etc. But this is only one part of the deductions. It gets much better. You can also deduct depreciation of your house. Now, normally you could only depreciate investment properties, so your house would not be eligible. But since you're using part of your house for business, not personal anymore, you can deduct that percentage of depreciation. While this really deserves its own video dedicated directly on how to depreciate properties, in summary, you take the purchase price of your house, divide that by 27.5, and then multiply it by the percentage that you have dedicated to work. Okay, let's try and make that a little easier to understand, because it's extremely important that you know about this. Take the purchase price of your house, not the current value, but what you actually paid for it. For example, my house is worth about $320,000, but I purchased it for $190,000. So I would use $190,000 in my calculations, not $320,000. Then I take that $190,000 and divide it by 27.5. I know it sounds like a strange number and there's a really long story, but in general, the IRS says that you can deduct the full purchase price of the house over 27 and a half years. And since we're currently calculating for a single year, that's the reason why you divide it by 27.5. So in this case, $197,000 divided by 27.5 comes out to $6,909 and some change, but we're just going to round it. If this was an investment property, like it was a rental house and you had tenants, then you would stop right here and just write off the $6,909. But since this is your primary residence, you can only write off the percentage that is used for work, like the studio, the office downstairs. So there's one additional step. And this final step is to take the $6,909 and multiply it by 13% to give me a final answer of $898.17. That is what I can write off on my taxes, in addition to the home office deduction that we calculated a few minutes ago. Remember, that was your taxes, insurance, utilities, etc. So now we have 2 deductions that we can do on there. For those of you that live in high tax states, I feel really sorry for you, and so does Clyde, I think. No, not really, he doesn't seem to care. And I'm sure you've heard of the state and local tax deductions, or it's more commonly referred to as SALT deductions, and how you are now capped at $10,000 per year. Or said another way, if you have more than $10,000 in deductions for your state and local taxes, including your property taxes, you're capped at $10,000. Using your home office, you're able to carry over additional deductions that you would have lost due to the SALT cap. That's one of those things you really need to sit down and work with your accountant because there's some very specific rules and it goes way beyond what I can cover in this very quick video. But you should definitely look into it because that's basically the third write-off that you're able to get that you normally would not have thought of. Plus, I have one more bonus tip. Did you know that you can deduct the mileage from your home office to your main office? Should I cover that in more detail and show you how you could easily write off another $5,000 or more per year just in the mileage from your home to your other office? Normally, you would not be able to write off your mileage driving from home to work, but since it's considered two separate offices of the same business, you can write it off. This is really going to require a whole detailed video, so if you want to see that, comment down below and let me know. Thank you very much for watching. I really appreciate it, as do Bonnie and Clyde. Please make sure you click like and subscribe. Helps with the YouTube algorithm. Thanks, and I'll see you on the next one.